Hey, what's going on, everybody? Thank you guys for joining. This is, of course, a special stream because I normally don't stream during the week at all. And the reason we're streaming, or I'm streaming, is because of what just happened over the past couple of days. We're hitting all-time highs in reverse repo again. We're gonna get right to that. But we're just gonna wait for a few more people to join. I know it's a little odd time, 6:30. So let me see here. So we're just gonna wait for a few more people to join in. I will do a roll call in a minute because this one shouldn't even be that long anyway. It's just really to talk about what the Fed has done and answer your guys' questions in case something doesn't make sense or whatever. Let us see. What the hell is this tweet? Here we go. All right. So yeah. So we've had the central bank basically try to pull on two strings, right? And that's what primarily this is all about. You guys got to understand what the implications of this string pulling is, because in the meantime, we still have to deal with fiat, right? We still have to make decisions based on fiat. And this is why it's important for you guys to be aware of this information. So let's look into the chat. We got 60 heads now. Balliard always the first man in the chat. Hilitech, yeah, Hex is going sideways, but that's what it does when it's not going up, right? It just goes sideways. If you're new to Hex, check out my scrolling ticker at the bottom for post-chain info. The actual website is pulsechain.com. The actual sacrifice website is pulse.info. So please be aware of that particular detail there. Let us see. Pulling up the screen. All right. So yeah, as you guys can see in this chart you're staring at right now, that's all Hex does. It goes sideways, and then it just goes up some more. So just be patient. It's coming. It always does. So shout out to Mud Dog, David. What's going on, my brother? Orion, how you doing, bro? Hexadente was good, man. Legal Strong, man. Yeah, basically. They did basically legalize the repo market to a certain extent, or nationalize it to a certain extent, right? Because they keep using it like that. Sir Edwards Trichrome, what's going on, bro? Trichrome. Let's see. Where'd that message go? Yeah, that's basically what they've been doing. And just to get to that, right? That's basically. I mean, look, when you look at what's happened over the past 10 years, even yet and still, you've never had a move like this. Past 12 years, right? Even before the crisis, right, of 2008, 2009. You've never had moves like this. So this is literally history in the making. So we're going to look back at these points in time, and we're going to be like, what the fuck? Like, how did that even happen, right? Dead in Denver was good. Anan Yamusukro, hope I said your name right. Shout out to you. Machiavelli was good, my brother. Pulse Lord was good. Yeah, man, it's crazy out here. So these are interesting times, right? And we have to be aware of what's going on. Mel Tony was good, bro. Hex Alter was good, man. Thank you for coming through. So, all of this stuff that's happening right now is not normal. So even I'm giving you my best and my best hypothesis, right? Because at the end of the day, all I can literally do is tell you what the money is telling me. And that just doesn't lie. So that's why it's easy to be right frequently when it comes to those kind of calls, because the money's going to do what the money's going to do, right? You're either subtracting or adding. So it's a simple accounting problem once you figure that out. And that's all the world is, right? Like the fiat system is anything with value, anything with numbers, and assets is really just addition, subtraction, multiplication, division, right? And it can't be by zero, because then that's negative values and shit. So it's either positive or it's a donut, or you're losing money. So, we can't have that. HEX.LIVE was good. Y un saludo a toda mi gente que hablan español en el chat. Oh, sorry guys, but you guys know people out here are loud as shit. What's up, Hex Phoenix? Well, welcome aboard, man, since you never get the cash from. Big Weed was good. Yeah, I don't know what's up with that, Big Weed. I have no idea. I don't really keep up with that kind of stuff. I just stick to what matters, right? I don't know what's up with the sacrifice situation or whatever was publicized in that Yahoo article. I'm not really in the know with that. Trust us, what's going on, man. Thank you for coming through. Let's see. Crypto Kane was good, my brother. Thank you for coming through, man. funny comment from you as always, bro. You a trip. Yeah, well, shenanigans. The price is still going sideways, right? So, well, right now we're back down to 12.8 cents. So it's looking interesting right now, right? Hex always does one thing and one thing only, and it's very important for people to understand that. That's why we got this little wedge-looking situation here. All right. It's just a matter of whether that holds or not. And if it doesn't hold, well, we'll see what happens next. But yeah, back to let's see. Yeah, back to this. So this is unprecedented, guys. This has never happened in the history of our legacy markets, right? So it's important to cover what's going on. Back in, I think it was June, end of June, they almost hit $1 trillion. They were literally 9 trillion off, 8 trillion off, right? Like that's it. And then yesterday they hit today actually. Today is Thursday the 29th. They are 987 trillion, and they were a little bit below that at 965 trillion yesterday. So this is a cumulative sum, right? This is what's happening over time. So this is what they're pulling from the market, dollar by dollar, right? And this is why it's important to understand what's going on here. Damn it, why the hell does it keep doing this? Yes, I was supposed to stream with Johnny Aguilar yesterday, and I wasn't able to because my internet was a little jacked up, but it's all fixed up today. So I'll be back on with him next Wednesday at 7 p.m. Eastern Standard Time in Spanish. Miss Exquisite, how are you doing this evening? Hope you are doing great, Miss Lady. Let's see here. T-Bird was good. Yeah, thank you for the countdown, bro. AB was good in the Omnicast. Let's see. One Moon. Soon enough, sir. Soon enough. Let's see who else do we have here, because it kind of dropped down for me, the chat. All right, let's see. Super Hex, what's going on, brother? Thank you for coming through. Let's see. Ty was good, homie. Vanity Sen, thank you for coming through. Trapcoin was good. Sensei Dozy was good. Crypto Curious, what's up? Let's see. Yeah, shout out to my Hex Asians. I always look forward to doing those streams. They're fun. If you don't know, I stream with the Hex Asians Sunday morning Eastern Standard Time at about 9 a.m. and Mondays, same time, Eastern Standard Time, 9 a.m. Let's see. What's going on, Johnny Chaos? Yeah, that was a little disappointing. And this is coming from me, who I've always been a person that even has promoted the decks, right, for Shapeshift, but for Mr. Voorhees to come out and say that Hex is garbage was very disappointing. Very disappointing. He'll get it when he's paying 1,000 per coin with it. It's all right. We can't save them all, right? So we do what we must. We do what we must. We shall continue. So right now, for those joining, I'm just saying what's up to the chat. What's up, Papa Laba? Jesse Jensen, what's going on? Yeah, that is very true. And you know what's funny? A little bit of Hex at so there's this new site. I don't actually know if it's new or not, but I like the hell out of it. We'll use it just to talk about some stuff for a little bit because this is a great comment. People don't, you know, let's just do a little 15,000 stake, right? Let's do it for max because why not? And let's make believe Hex is 50 cents then because who gives a shit? Oh wait, yeah. Well, there you go. All right, a measly 15,000 Hex stake today, which has a present value of $1,929. Right, and this is hexcalc.net. Right, and the thing is the share rate keeps going up. Doesn't stop. Right. So you only get 2.45 T shares here. Right. And this is just taking the data that the site gives you anyway. And what they're doing is that here's a methodology. Hex earnings are based on the average daily payout of 5.86 Hex per T share with an inflation rate of 3.69% compounded annually. Right. So from $2,000 at this point in time, you're saying to at least make 60,000 at the end of this bad boy. And this is with just Hex at 50 cents. Right? We know that's not going to be the case. So let's just give it a nice number of $5, $500,000, $600,000, right? So 75,000 in principal and 520,000 in interest, right? This is the power of Hex because Hex is paying you in crypto, right? The interest you're generating is in crypto, and that's why it's important to understand the compounding effect that you're experiencing here. It's not just compounded annually in crypto. You know, it's also compounded annually in the sense that we deal with trash, so we have to account for that trash money. Yeah, but you know, it's a shame. You know, it's a shame. They'll figure it out one day. It's all good. What's going on, Goldie? Esteban, what's going on, my brother? Morgan Maniac. Yeah, pretty much. That's pretty much it. Yeah. Shout out to you, Beso. Thank you for coming through again. 1 day, 6 hours. Things get super interesting. Yep, I agree. We will see. Probably get there at some point. Not trying to stream too long tonight, so I don't think Kareem will be able to join, but we will see. Trying to see if Access, maybe Alex Dente might join, but for now, we are good. What's going on, Dylan? Sam Fisher was good. Alexian, what's going on? DXTA, what's going on? Zil Surfer, these repos even mean? I got you. So interestingly enough, guys, just to let you guys know, I'm working on a website. And that website will have little blogs on it, just explaining little basic stuff like what is a reverse repo. So a repo, just to get you guys started if you're new, a repo is essentially a loan that an institution takes, and by institution I mean a hedge fund or mutual fund or whatever. Well, not a mutual fund, but a hedge fund, or some entity of the like, asset manager of some sort. They borrow money using high quality collateral, meaning assets that they already own on their balance sheet. They take that, right, and they go to a lender. They ask for a short-term loan. Typically, the loan is less than 90 days, and they're using that loan to leverage their position or leverage their financial position in an existing market, or to just have more cash on the books, you know, whatever they want to do with it. But it's still a function of leverage, right? Because they're borrowing money to fortify their balance sheet, right, a little bit stronger, even though they're using capital that they already have on the books. So what's happening here? What's happening here is that we're tracking reverse repo agreements now here, right? So the reverse repo is literally the opposite. What's happening now is that the Fed is calling those loans back, right? They want their money and they want it now. And that's what we're seeing at an unprecedented rate. So that's the point of this stream, is to discuss what the implications could be and stuff like that. So if you guys got any more questions, shoot them in the chat. But yeah, I'm working on a website, and the website will have this kind of basic information just as a primer. Whenever it's topical, you guys can go ahead, pull it up, and all of that good stuff. You're welcome, man. You're welcome. Oh yeah, that too. I did make a stream on it, but that's a little explanation for those that don't know. So thank you, Your Excellence, for hooking that up, and shout out to you. Heximus Maximus was good, homie. Ryan Lopez. If you guys don't know Ryan Lopez, this guy literally has the best Hex streams, and none of them are about Hex. Thank you for thank you for the super sticker, brother. For some reason, it's lost. And where the hell did it go? Ah, here we go. Oh, wrong one. There we go. There's that super sticker. Appreciate that, brother. You guys go check out his channel, man. He got some good material over there. But yeah, so that's what's going on with the repo business. So the reverse repo is literally the Fed calling their loans back. And that means trouble for them, right? Because if you got a loan out and you don't have the cash to pay it back, then guess what? You got to figure out a way to come up with that cash. And that typically means you have to sell your worst trading position, right? Or your riskiest position or something. You got to sell something, and that's the whole point. This is a risky point in time for all markets, because if it's shout out Bala, what's going on, bro? If it's shout out to Vibra, what's going on, Vibra Finance? Hope you guys are doing all right up top. If this starts to drag, and it's already affecting, the retail level market, by the way. And I had a stream about that. I did it maybe like last week or the week before. And the stream is called Credit and You. And in that stream, I basically go over what the implications are of what this is so far to the retail market. And if you have a personal credit line, you're at risk of having that line called and you being forced to pay. So, yeah, it's funny, right? Venus Love Factor, shout out to you, man. Thank you for coming through. Hex Beta, yes, get your notebooks out, because it's about to get a little crazy. Let's see. Jay Everything, shout out to you, brother. Black Square, thank you for coming through. De pronto, mi hermano, de pronto. Yeah, we're coming, guys. This is coming. What's going on, Crypto Journeyman? Yep, sniper attack. I only attack when it's time. So the website, the name doesn't really matter right now because it's not live yet. Once it's live, hopefully within the next 48 hours, and I said that 48 hours ago. Hopefully I can let you guys know on Twitter what it's called, because right now the name of it is just pointing to hex.com. So it's whalesonly.com, just for those that want to know, but it's not live yet. So there you go, whalesonly.com. Right now it's pointing to hex.com, so no reason to go there, actually. Shout out to Aso. Thank you for coming through, man. Appreciate you, brother. Appreciate you. Yeah. Let's see. Yeah. He didn't know, and I explained it to him a little bit. And it's important stuff to know, right? It's important stuff to know. Thank you for the super chat, Black Square. Te lo agradezco mucho, mi hermano, de verdad. And Cash Plus, appreciate you, brother. Thank you you always dropping the cash on me, man. Appreciate that. Oh man. Let's see. I think we're almost done with the roll call. Shout out Noel. Thank you for coming through. Aloha to you. Cryptomatic. What's up, my brother? If you want to join, let me know, man. I can send you a link. Let me know. I will send it to you shortly. And you can join if you want. I don't have any code this time around. Let's see. Where'd you go? There we go. If you want to join, if you can. If not, all good, bro. No pressure. Because I'm just going to talk macro stuff anyway. But questions are welcome. All welcome. And I will try to do a good job of keeping up with the chat. All right. I see your comments, guys. We'll try to address that moving forward. Yeah, basically, yeah. So this is a good comment by T-Bird. Repo is the last level of the Fed system's infrastructure for keeping their zombie fiat system alive. Excuse me, guys. QE to infinity, aka hyperinflation escalation, basically. Because what's happening now, and here's the interesting thing, because this is where it gets confusing, and this is why I wanted to do that stream. Yeah, that remains to be seen, but we know that the average repo is 90 days, right? So you can presume that at least 68% of all of the repos outstanding are going to be called within the next 90 days, and that's 1 trillion. So basically, you got a quarter to get your shit together, starting looks like January. Well, really, once we broke out from here, and this was. Yeah, and we're already seeing the reverberation. So it's probably going to take like a whole 6 months for all this shit to hit, because it's only been 4. And we're just starting to see the cracks in the personal credit market. So once it hits the institutional credit markets, then there's another ball game. Damn it. So we'll see. But we're already seeing the effects, right? Everything is costing more no matter where you're at. People are just getting paid to do nothing in a lot of places. So there's a lot of money floating out there. They printed trillions of dollars last year, right? Now they're pulling back $1 trillion, right? So maybe I'm wrong. Maybe they don't pull anything, but maybe nothing happens. Tub the rules, what's going on, brother? Mix, aka Jasso. Shout out to you, man. But yeah, basically domino effect. That's basically how it works, right? Capital flows from A to B to C to Z, right? And it's important we remember that, because capital does not just go straight forward, right? It's not a linear thing. It's a transmission mechanism. It's important we remember that. What's going on, Post Chain Hex Miller? Shout out to you, Hexfish. What's going on, man? All about the Hex. What's going on, man? Thank you for coming through. Thank you for being a new sub, man. Garretton Riley. Hope I said your name right. Yeah, man. So, you guys got any questions? Definitely let me know. Antonio Led, what's up, man? Valiant, again, thank you for coming through, man. You're always prevalent in all of the streams, man. I don't know how you do it. But yeah, this is exactly what I'm talking about. A couple of weeks ago, Wells Fargo stopped lines of credit, personal lines of credit to be specific, from 3 to 100,000. And those people had, I think it was 6 weeks to pay it off, or maybe 3 months, something like that. What's going on, Crypto Games Club? Something like that. So you just have to be aware of what's going on, right? Sydney Boy, what's up? Chris J, what's going on, brother? Carla Louise, there you go. Latina in the house. Appreciate you, man. Thank you for coming through. So yeah, it's just a lot going on. Well, be careful, because they're probably going to be calling you soon. And that's what's going on, right? And these are things that, even if you're not trading, right? Am I Satoshi? Nah, not Satoshi. I just respect my privacy. I don't see you on the stream showing your face, so till then you don't really get to ask that question, right? So yeah, we're just here talking about what's going on, right? What's good, what's not good, and yeah, this is well, here's the thing, right? You would think they need a miracle. But the reality is that what they're doing, in my opinion, is exactly what they're trying to do. I think that, and again, this is just my opinion, I think that the snafu that they're running into now is the simple fact that we're experiencing what is really hyper stagflation, right? Now, this is something that most people don't even know what stagflation is. But stagflation is basically when you have the instance of high, what is it called? the cost of goods going higher, right? Uh, During a recessionary, like things are bad, but the cost of living is still going up. That's basically what stagflation is. Stagflation or recession inflation is a situation in which the inflation rate is high, economic growth rate slows, and unemployment rate is steadily higher. Now, this is what's interesting. Let me find this. We had GDP print today. So what I'm saying literally goes contra what that definition is. Shout out Deep Stakes. Thank you for coming through. And here we go. And now here's the thing, guys. I like to use Zero Hedge to discuss current events because they just report whatever data points I care about. And that's the reason I use them. I'm out here repping Zero Hedge or anything like that. They don't pay me for anything or anything like that. So again, this is interesting. They expected an 8.5% print, but just got 6.5%. Now, here's a cool thing. You got to understand what would cause the GDP to be this high, right? We've already discussed ad nauseum numerous times what happens or what's actually causing GDP to be positive, right? And if you're new, let me help you. Let me inform you. Let's see here. Give me a second. I think this is it. Nope, not this one. Hallelujah, baby. Hallelujah. All right. So when you're looking at this chart, the red line is basically a representation of how often your purchasing power is increasing. And that's basically never. The blue line is a representation of how often GDP, the value of GDP is increasing, however. So the question then becomes, well, what is the measure of GDP, right? And that's what most people don't know. And right now I'm going to show you. And I'm going to give it to you from the horse's mouth because my opinion doesn't matter. What matters is what the liars say, right? Because that's what it's about. It's not about what I say. It's about what the facts say. So let's see. There we go. This should do it. Let me see. Here we go. Perfect. What is gross domestic product? Because this is what's important for people to understand. The value of goods and services produced in the U.S. is GDP. The percentage that grew or shrank from one period to another is an important way for people to gauge how their economy is doing. Now, this is the lie that's promulgated, right? Because this is what's important for people to understand. This is a lie. This is not true. Because that's what they want you to believe, right? But what is GDP really, right? Well, let's see. Because they got the actual definition in here somewhere. Where are you? Where are you? Okay. Maybe not. A comprehensive measure. Here we go. So this is what GDP is, and this is very important. GDP measures the value of the final goods and services produced in the U.S. without double counting the intermediate goods and services used up to produce them. So what does this mean? Right, because this is the crux of what I'm talking about here. This is the crux of what I'm talking about because this is the definition of GDP, and this is the important thing to understand when you're looking at this chart. Because this chart is literally telling you exactly what that definition just said. Now, what is that? Very simply, is that as long as the value of the dollar is lower, the value of GDP would always be increasing. Now, how do we see this in a normal sense, right? Not just in this crazy mathematical form. Well, let me show you. Right? And this, again, they have the same, we're talking about the same colors representing the same thing. The blue line is GDP in dollar terms for 2011. And the red line is the value of the dollar over time, right? In an indexed form, with the base value being 100 for 1984 through 82, right? So if this is 100, that means from then to now, we've lost 62% basically through 2020 in the purchasing power of a dollar, right? But in reality, if you look at it from since inception, right, 1914, and you do the math, 994 divided by 38, right? That's, what is that? Oh, there you go. 96% loss in value since inception. That's what you get paid in every day if you have a job, right? These are the important things to understand. This is why crypto is so important. It's such a threat to the system, right? This is, I mean, I heard even Bitch Boy got banned from YouTube. I don't know the extent of it, but that's what I heard. But these are the things that they're going to do, right, to keep the information from reaching out. This is why word of mouth is important. This is why educating yourself is important. This is why these streams are important, whether it's Quant Gang, effing Hangout, whatever it is. We're always talking about the same information. Always tune in, always stay in tune with what's going on, because the street's alive, right? The street's alive and they don't care. My man Cryptomatic is just joined us. What's going on, bro? How you doing?
Hey, how are you?
Doing good, man. Doing good. Just here breaking down what's going on.
Yeah, it's super important. I don't know if I can be much of a help because I don't know shit about this, but I can maybe ask some questions.
Correct. Because everybody's gonna have questions, right? And I'm gonna be talking a lot.
Is my audio okay? Do you hear me, or is
you sound great. You sound great. Yeah, you don't have to do much of anything.
Okay, cool.
You know, I'm trying to keep up with the chat and do what I'm doing, right? So maybe you can help me pick good questions.
Yeah.
Like, what am I smoking? I'm actually smoking green crack. Just for those that are curious. And that's a real strain, yes.
Now you get 140 viewers live, man. That's amazing. Let's go.
Yeah, it's a slow day, man. It's a slow day. You know, what days of days? A Thursday afternoon, right? People are probably trying to duck and dodge the rain. It's 7 o'clock. They probably cooking or something over here on the East Coast.
Yeah, someone said in Boston it's raining heavy.
Yeah, it's raining like crazy over here too. Yeah, New York is raining like crazy. But yeah, let's get back to this. So look,
yeah,
we've gotten a reduction in the value of a dollar of 96% since inception of the Fed. That's real, right? That's not something anybody can say is made up. This is their own data. So, you know, whoever doesn't like it, they can email them. It ain't got nothing to do with me.
And is it really true that this happened here when they fell off the gold standard in the mid-70s?
Well, what happened after the mid-70s is that everything accelerated, because what allowed to happen. So what does it mean when a currency is no longer backed by anything? That's the real question that you're asking there. And I think that the answer to that is that now you don't have anything like the T-share rate to give anything value. It's just whatever exists. And the less that there exists, the more value that there is because of the scarcity factor. And the more that there exists, well, the less value there's going to be because of the inverse of the scarcity factor, right? Which is abundance, which in this world makes things valueless. right? So the more of a thing that exists, the less value it has, right? So that's why we're going through this exercise of understanding exactly what's going on here, right? And how do we see this reverberated in the economy? Well, let me show you. Because these are important concepts to understand. Like, this is what brought me to the other side of what I was missing in terms of understanding that shit was fucked up. Because we all know things are fucked up, but the question is how? Where did things go wrong? Like, what the fuck happened, right? That's the bigger question, right? And now we're going to look at consumer loans, because this is what it's about. It's about the spending habits, right? This is what drives GDP. Because again, what is GDP? GDP measures the value, not the units, not the quantity of units produced, but the value of the final goods and services produced. Understand? Well, then the question that I typically get when I point this out by the dummies I want to believe this is, well, then how do you count services? Well, bitch, you just count the transaction. Every time you charge something, you count that as a transaction. That's how you count the goods and service. That's how you count the goods. The goods are already units within themselves, right? Because they're widgets, basically. They're items. They're physical items. A service isn't going to be a physical item. So how do you count that? Well, you count the number of customers you serve. Period. That's it. Because if the whole notion is to measure economic activity, well, it shouldn't be by the debasement of a currency, should it? I don't think you're measuring anything but the increase in the value of what shit costs, right? Not really the value being produced. Like, you get what I mean? Like, the value being produced by an economy is not the quantity, the currency units being produced. That's not how it works. And that's what they're trying to tell you. They're trying to tell you that the higher, wrong chart. The higher the GDP line goes, right? The nominal GDP line goes, the higher it goes. Oh, actually, that reminds me. Make sure you guys a tweet, because this tweet is what like lit me on fire to be like, all right, I gotta do a stream today because I was still in between. And let me just show you guys why, because this is exactly what I'm talking about, right? This is exactly what I need people to understand, that this is a false narrative. Where is it? 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 Ah, here we go. Yes, Saya. So the narrative is, this is the fastest economic growth in the first half of the year in nearly 40 years. That is progress. Now,
it's amazing.
All right, but what is he showing you? What is it that's being shown? What's being shown is the billions of changed 2012 dollars. That's what's being shown. Not the rate of change, which is what growth actually is, right? So not only are they showing you the wrong thing, they're lying to you about what they're showing you. And then on top of it, it's a lie. Now, how do I know it's a lie? Well, I just told you, and let's get back to it. Because this is important for people to understand, right? This is exactly what this dude said. Now, I don't think the data point has been updated here yet. Let me see. Nah, 2020. It's not updated here yet. The GDP number for 2021. That'll probably come out once it's I'm probably not looking at the right data point, but it's fine. Because the whole fact of the matter is, let me see something. GDP.
Right, so you're saying they say it's the number of transactions or something, but no. GDP means gross domestic product, right? So it's the goods that are being produced and also sold.
I'll tell you right now. So check it out.
But if people's purchasing power goes down, then that's
exactly
not right.
That's not true. Exactly.
That can't be.
Right. So step one, GDP. Where to go? Step one, GDP is a measure of economic activity, and the higher it goes, the more successful it is. That's the narrative that everybody is sold all around the world, no matter what country they live in. And what I'm about to elaborate on is true for every country, because every country prices GDP the same way, and that's in fiat terms. Everything that we see is in fiat terms, right? So GDP is supposed to be good, right? It's supposed to be a good measure of economic activity, right? But the GDP is actually a measure of the value. So this is the key word, right? Because when you search for value here, what do you get? Denotes a degree of importance of something, da 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 da. Value systems, da, 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 right? So it's not talking about the monetary worth, right? But that's what it means, right? But that's not. This is the ethical definition. So the other definition is the monetary worth of something, aka market price, right? That's value in this sense because we're talking about economics. Straightforward, right? There's no confusion there, right?
Yeah.
So the value in this sense is monetary. So then we start again. GDP measures the value, not the units, not the increase or decrease in transaction or actual economic activity, but the value of goods and services, which over time is always going to go up. And that's what this chart is showing. Now, this is the quarterly GDP. This is the normal one. This is the one that you saw headlines on. And this is the one that you just saw the chart on. And this is the previous peak that they're highlighting that we are now over, right? But what happened? What actually happened? Well, let's see. Let's throw something on this. Because, again, it's their data. It's not mine. Very important that we keep that in mind as we look at this information. Because, let's see here. 2010. All right, I guess I'm stuck using that one. They just swap out their data so often, like delete it and remove it or whatever. So you just never know what you're gonna find. So let us see. Because what I'm gonna do here, I'm just gonna replicate the same chart that you guys already saw, just in different format. So let's see. Magically looks the same. A chart you've already seen, right? Now, what I'm gonna ultimately do is make this chart look the same as the rate of change one. So you guys can then see. Now, we're not going to have a print for 2021, unfortunately. Oh, we do. We got quarterly here, so we're good to go. Excuse me, false alarm. So we're going to actually get a somewhat accurate, almost up-to-date representation of what's actually going on with my theory, which isn't really a theory. It's clearly mathematical proof because there's no other way that this works. Things are priced in dollars in this country, and this is what's happening, right? The value of the dollar is constantly decreasing. So whatever you price in that thing is always going to keep increasing. It's simple mathematics. For the number of the thing that is being, the denominator is always going down, then the value of that thing is always going to be going up. How do we know that's true? Let's go to Wolfram Alpha to check. Let's go with a big number. Let's go with a small number. Let's go with 1 divided by 100, right? 1 divided by 100, small little number, 0.01, right? 1%, very simple. And I really want people to be able to conceptualize this simple concept in their head because it's, when you look at markets, it's really this easy. It's really about ratios because ratios dictate what the rate of change is in anything. This is why I'm able to see things so simply and so clearly. So we start with a 1 over 100. We know it's 1%, right? 0.01 in decimal form, nothing crazy. Now let's drop this to 50. What happens? What happens is that value now is increased to 20%. Or 2%, sorry. Right? So we just went up 50%. That's what just happened because we reduced that denominator by 50 from 100. So when we go down 25% again, what's going to happen? We're going to go up another 100%. Not 50, sorry. Another 100%. Right? We went from 1% to 2% to 4%.
On the double, on the double, on the double.
On the double, exactly. And that's all we're doing here. So if we drop this to 12.5, guess what? We're going to jump to 8%. See? So the smaller the denominator goes, the bigger the value that the ratio emits is going to be. Now we're at 16%. So this is what I'm always saying when I'm talking about ratios and how one is changing over the other. Once you understand this simple concept, you're golden. Like golden, golden, golden. It took me a little while to wrap my head around how simple this is, because you wouldn't normally think it's that simple, but it is. If something is going up versus something else going down, well, it can only go one direction because that's what the math says. Let's bump this up to 10. The value should be significantly greater than 18% or whatever it was. 16% versus 160%. You see what I mean? That's it. It's that simple. So, and if you increase this number to say something huge, well, then that number is going to collapse, right? Because the denominator just got huge. So then, look, you drop to 4% versus 160 versus 14 versus 16%, which it was prior to, even before it was 160, right? And it's just because these values are changing up top and down bottom. And that's really all you have to understand about what's happening in the markets, because that's what's going to dictate how things are going to actually move. Now, I know it seems a little funky at first, but trust me, it's that simple. Because that's what's happening here, right? You got the value of this thing, which is priced in dollars, but the value of the dollar is just always going down. So the value of this thing has to magically always be going up. Now, what I wanted to show after we were talking about this, but first let me show the rate of change. Oh, come on, really? All right, let me just show this line back on here again, since it just killed it for me. Purchasing power. All right. So what I'm going to do is I'm going to reformat it, but now I'm going to show it as a rate of change.
All right, I understand. So you're saying in the way the dollar goes down, by that ratio, the other line basically has to go up.
Correct.
Right.
Correct, because it's being priced in that value. So the only thing it could realistically do is do the opposite of what that's doing. That's it. Can't do anything else. And it's really that simple. It's a forced change. It's a forced effect, a forced change. So there's not much that can really be done about it. Except that. Now this is gonna get interesting, because I'm not sure what we're gonna see here.
And that brown line is the purchasing power.
Correct.
Right.
Correct. Let's see.
So what could be done to increase the purchasing power?
Buy crypto. That's my whole point, bro. Literally, that's it. Because you have to understand, you have no power over this system. Yeah. They do. And that's how they maintain their power over you and what your life is going to be like and all of that. That's like, why I'm relaying all this information and sharing all this information, because I understand that it's not something people really think about every day. So here's a simple way to look at it, because it's happening whether you want it to or not, right? And people need to know it's happening, because it's their lives on the line. It's their kids' lives. It's whoever, right? Their family, whatever. So look, here we have, now let me go a little bit further in to make this more easier to view. Oh, did I mess it up? Okay. So this is the past 30 years almost, right? 25 or so, 20 years. This is all the printing, right? I mean, what do I mean? Right? So the dollar was, it was positive for a little while, right? In terms of a rate of change in the value, right? Because this is quarterly now. So we're looking at this on a quarterly basis. So this is quarter over quarter. This is how the value is changing over quarter, right? So it was positive quarter over quarter, right? The average, whatever, for this metric, right? Oh no, false. Right. Nope. Ha ha ha. False. It's never positive. Sorry, I was looking at the zero line and confusing myself. Okay, so let me help you. Let me help clear my commentary and help not confuse you guys any further. So the blue line is on the left, which is this line over here, which is what's dictating this dark zero line here. Okay. The red line, which is the consumer, the actual purchasing power for the dollar, that's right, the right side. Jesus. It's this side. Okay. And the zero line is all the way up here. So the only time it was above zero was during the crisis, 2015, from February to I guess that's it, to June, June, right? In between May and June, it went negative. And then it almost went positive last year in May, but that was just due to a snap in the rate of change because they printed so much currency.
Yeah.
Right? Because everybody knows that everybody printed last year. Like, this isn't even a secret. Like, everybody knows. Oh, hold on. Give me a second, folks. Taking a moment just to see exactly what this is that Trust is just telling me. Let me see, because I did hear something about this. Just hadn't seen anything concrete yet, but they're gonna try. And this is why all of these streams are hyperbolically important. Here we go. All right. Let's do this. So this tweet is from 7/17. Oops. And this is all the topical stuff. Like, this is what I'm trying to talk about, right? So trying to regulate. So they're trying to regulate DeFi. So let's see what Richard Hart says. Rep Don Bayer, whoever this guy is, a rep for Northern VA in the U.S. House, chairman of JC Dem. Oop. Yeah, all right. We don't need to get into all of that. Just some Democrat. Is trying to take your rights away using government force. This shall not stand. His current term ends January 3rd, 2023. He owns Volvo, Land Rover, Kia, Volkswagen, and Subaru car dealerships in Virginia. Email the manufacturers and let them know your feelings. Great. Yeah, very good point. Because again, this person is a public representative. He's supposed to be looking out for our best interests, but he's clearly not, because he's trying to introduce digital legislation, digital asset legislation, which, no matter what it says in a press release, we all know what it's going to look like after it's said and done, right? And this is why it's important. So let's see.
Yeah, it's about miners. Miners have to declare, and even people who run decentralized exchanges or something. So it's, yeah, I guess it's where the big money is.
Right.
I don't know if this is for the individual people.
Oh, no. They definitely want to. So a while back, they wanted to lower the money rule from $10,000 in the U.S. to $350 because of crypto. Yeah. And that would affect the whole globe because everybody bends over to the U.S.'s nonsense. Yeah, they do. And this is why it's important to talk about this. Every other country, right? Like, for example, Colombia, Mexico, that I can think off the top, are following suit with the U.S.'s FATCA legislation, which essentially allows the tax law to travel with the citizen. How great is that? Yeah. So now you're going to be tied to whatever tax jurisdiction you're born in, no matter where you're born. How much sense does that make? That makes no sense.
There was another tweet earlier than that which summarizes it. Can you put that up as well?
Richard Hart?
Yeah.
All right, let's see.
It's 11 minutes ago.
Hold on. I have a faster way of finding this. Or not, because it didn't go out. Who is Hex News? So nope. Let's just search. Oh wow! Look, you see, it's still playing games. It unliked it. It's still doing that. Recorded proof. Recorded proof. Finally.
No, it's
How
not
about that?
It's not that one. This one.
This one.
This is his latest. Yeah, yeah. If you click on the picture, then you have the summary. It's like, yeah, here you have 3-4 points. If you can read that.
The new bipartisan infrastructure bill in the Senate includes new tax reporting obligations for crypto. Unfortunately, in the drafts we've seen, the category of persons who would be obligated to report is so broad that it potentially covers persons who only provide software or hardware to customers and who have no visibility whatsoever into users' transactions. It potentially also covers miners and dexes. The saving grace is that arguably miners and dexes, for that matter, do not have customers as defined in the tax code. Correct. We've been engaged with the relevant staff who worked on this over the past few months, but the problem is that this language was a last-minute addition to a must-pass bill.
Ah, okay.
We worked all day yesterday trying to fix and will continue to do so today.
Right, so this is the rebuttal attempt, basically. Okay.
Apparently.
Yeah, all right.
Sounds like bullshit to me.
Come to Germany.
Yeah, well.
They're still okay here with the taxes, but
for now,
I think that's subject to
gonna
change
end.
as well.
Yeah, for sure. We don't appreciate having our rights taken away. Da, 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 da. Yeah, I mean, this is crazy, and they're gonna keep trying, and they're gonna try to figure out a way to box people in because that's their whole goal. This is why crypto is bad, right? You hear the usual negative voices screaming now because people are catching on, right? Like their tax revenues are dwindling. All of that stuff is happening, right? So here's the thing. You had a shit ton of dollars being printed last year. And interestingly enough, the value collapsed. And interestingly enough, the value for GDP shot up.
Yeah.
QED.
Can I ask you one here? Is because it was positive in 2016-17. I remember for a fact that versus the euro, the dollar was much stronger in those years than it is now. Does Forex kind of play a role into that or not really?
Oh, yeah, for sure. Look at where the dollar is now, right? And
yeah, it's like an 85 cents versus the euro, and used to be above.
Hold on, my computer's acting slow. I got a lot of tabs open. Come on. Yeah, no, I gotta wait. Yeah, there we go.
Anon is saying that makes him want to sacrifice more now.
Wouldn't be a bad idea.
Yeah.
Okay. So 2016, 2017, yes. Right?
Yeah.
Like you see, it was a bull run in the dollar.
Yeah.
Right? But then it rolled over again 2017 into the early 2018. Then it ran up again into 2020. And that was all she wrote. It's been Puke City ever since, right? And it just ran into resistance again. And it looks like that's what's really got this Bitcoin move pumping, right? Like the whole crypto market is moving right now in conjunction with that. So, for a while, it was Bitcoin and the dollar were moving in tandem until the dollar snapped. And I was pointing that out because that's really the biggest telltale sign for, risk on assets to be, wary of what's happening. And right now we're looking at the euro dollar and we can see that thing clearly popped, right, from my famous lines here, which I will never give away. $1.17 basically, right? So, what the question is, will the bull run continue? And looking at those indicators, it kind of looks like, yeah, Like if it does traverse, right, the momentum trend, the downward trend of momentum, it'll probably keep going up. And that's just gonna keep pushing the dollar down, right? Because a dollar is this value for the dollar is merely a bucket. It's an index. So what is the dollar? Most people don't even know this. So let me let you guys know. Dollar is actually a bucket, right? It's the dollar index itself is a bucket of about 6 currencies. The euro, and I can't remember what the hell else. Let's see. There we go. The euro, the yen, the pound, Canadian dollar, krona, and the franc. And these are the respective weightings. So this is why the euro matters so much more than everything else. That's the reason why. That's why I have the euro here and not anything else, because the euro is the biggest piece of the puzzle when it comes to the dollar. The yen is the second biggest piece. Give me a second. Where is this thing? Yeah, 13.6% in the pound. But the euro is really the big dog, right? Because if these three are pretty much just following each other, or this one isn't really doing anything, it doesn't really matter. This is like a commodity currency, so it's not doing much. Same thing for these two, actually. They just kind of track crude to a certain extent. The franc is the only one that kind of deviates in terms of monetary policy. But these three, they just try to trade inverse of the dollar.
Cool. I didn't actually know this. So 60% basically almost is
the dollar is the euro,
and then the yen and the pound. Wow. Okay.
Correct. Yep. This is real basic stuff. If you don't really know FX like on a fundamental level, you're not going to know this. So it's no big deal. Most people don't know this. But this is, important to understand if you're trying to understand the movement of the dollar and why it's doing what it's doing. Yeah. So let's take a look at the SAC wallet real quick, just to take a little bit, just because I'm curious, because I see the page there. I'm like, let me take a look. All right. So we got 3.9. Look, this is a lot of hex, man. Jeez. 3.12 million hex.
Yeah. Billion.
Yeah, billion. Sorry, billion. Currently trading 12.8 cents or so. What was I going to GRAPHHEX? Let's see what the supply is. The SAC supply so far. I don't know why this keeps popping up. Almost 0.5%. That's crazy. That's crazy. That's a whole lot of hex. Yeah. That's a whole lot of hex is just gone. Like, wow. That's phenomenal, man. That's crazy. I didn't know what to expect, but that's crazy. That really is shocking. All right. Yeah. So let's get back to the convo. So you kind of get the bigger picture now. Is it kind of making sense?
Yeah, totally.
Yeah, they printed all those dollars, which is why GDP is looking so good from a nominal perspective, because the value just keeps going up. Well, yeah, no shit. The value of the dollar keeps going into the toilet. It should, right? Always look up. All right. So what's going to happen now is I'm going to show you guys credit, right? Because this is what's led to the deterioration of what we're living through now, right? Like, what happened? How did everything spiral out of control? Now, this is mostly in the West. I don't think Germans or Europeans in general have this problem, this credit issue. It's really more, this isn't giving us all the data. Hold on.
Well, we have different rules. I wanted to ask you about
Go ahead.
the car repo thing, but no. You go further on your train of thought, and we can maybe get to that later, because that is really where I'm losing it. This is like too American, too special for me.
Right. This is very unique. This is very unique. Yeah. Let me see here. Trying to go to. So when did they start the push for credit cards? Right. That's what you have to look at. Right. And over here in America, late 70s, early 80s, really, really heavy push, 1983 and up. And look at what just so happens to happen after 1982. Pew! Right? Now, let's make this an interesting
in that comparison, yeah, you're right. It's in Germany, most people actually don't have a credit card.
Right.
Like it's only if you travel international, because otherwise there's really no neat because you can buy anything everywhere with a debit card, and they're not really pushing for people for crazy. They have the overdraft and all this on with crazy interest, 20% or something. But like if you overdraft your accounts on the debit card, so then they tax it heavy. But they're not really pushing like that for everybody to have a Visa or a MasterCard or something. It's it's not that common. It has changed in recent years, but during what you just said, the 80s, the 90s,
it wasn't like that.
Hardly anyone had a credit card. It wasn't a thing unless you were like a businessman who would travel international. Then you had your Amex American Express card, but it wasn't that everybody had a credit card like it's in the US or in the UK as well. It's heavy in the UK, I think. But
yeah, it is.
Not so much in Germany.
Yeah, like when I lived there, it wasn't like you just didn't see the prevalence of the marketing material for credit card companies in the US versus the rest of the world is almost like uncomparable. Like it's just you can't compare it.
For sure. Yeah.
Like it's crazy. And what I want to do now is I want to show people the rate of change so everybody can see just how this progressed through time, right? Because that's what it's about, right? Now let's take this here. Now 83, right? That's the year I talked about. Now, of course, if the data is being tracked from back then, is the initial push should always be the greatest, right? Because the numbers are the smallest. So that shouldn't be surprising. Let's go to 1970. All right. So from 72, right? Now we had a recession here. And this one was pretty big. But we went. This one, I'm trying to remember. This wasn't the savings and loan. Savings and loan was like somewhere over here. I'm trying to remember what this one was. Can't remember. I think it might have been a manufacturing recession or something like that. I can't remember. 1980 U.S. recession. Doesn't really say.
It was the height of the Cold War, like
that was like the end of the Cold War, 1980.
Yeah, military.
And any time that there's a drawdown from war, there typically is some type of economic drawback. So that probably could be it. But the whole point is I want to just highlight just the jump, right, from something to nothing. And when you look at the chart nominally, right, you got to understand that this is what's stacking up over time. So even though the max, right, like the all-time max was then 1984, right, like for what we would consider like escape velocity, meaning like in terms of statistics, like this stuff is like it's taking off. Right, like you're hitting acceleration and you're going boom, and you're never taking your foot off the pedal, and that's what you see when you refresh this chart and you just look at it and just in the regular numerical form, right? Like it just took off after 1983.
Yeah,
and that's what you see, right? And what you see in the flat periods or when it hits zero is these periods when it just goes sideways for a little bit, right? But as you can see, it's just stacking up over time, and that again is also a function of guess what? Purchasing power of the dollar. Would you like to see that? Why not? Let's do it. Because it, I've never even done this chart before, but this is the kind of things that, like, man, it's in your face. It's with their data and everything, and they're just hiding it, bro. Like, because they know nobody's gonna look for it, but it's there. It's there. And
it's almost in line with the Dow Jones index too.
Correct. Interestingly enough.
You have that little dip in 2008, and then up it goes.
Right. Let's see here. Oh, I gotta edit both. Give me a second because I gotta split this format. All right, just gotta format the blue line, and we're good to go. And bam, even better than against the dollar. This is disgusting. You guys just enjoy that. Shout out to you, X19. Thank you for the super chat, brother. Appreciate that. Hi, Howell's only and all Hexicans. I'm visiting family, watching on big screen TV by the pool. Wife just joined me. Shout out to you, man. Living the life. That's what's up. Shout out to you and the missus.
Chilling.
Yeah. By the pool chilling. Shout out to you, man. So again, right, we're looking at just the preponderance of the data just stacked against any lie that they just want to throw at you. And interestingly enough, it's their own data. So it's not like anybody's even making it up. Right? So, you have the purchasing power of the dollar constantly below zero, right? And I have them on the same scale so that there's no confusion here. Right? When this is constantly negative, this is constantly positive. And this is just you digging yourself deeper in the hole. Or society digging itself deeper in the hole, right? Because that's what's ultimately happening here.
So again, what mechanics could they deploy to reverse that trend? Would it be interest rates rising, or?
Well, let me ask you this question. What makes you think that they have any interest in reversing that trend?
Because everything can't go up forever. It will pop at some point.
Sure, but you're assuming that somebody would want to invoke that in a safe way.
Yeah.
Not how it's going to go down. No, sir.
Yeah.
No. That's not what happens when currencies meet their terminal endpoint. When currencies meet their terminal endpoint, what you get is Argentina, Chile, Colombia, Venezuela. Inflation. That's what you get. Hyperinflation.
Hyperinflation.
We're living through inflation already. We've been living through it. That's what this chart is saying. People just haven't been aware. Because it's been slow.
It keeps sneaking in. But, when you posted last, I don't know when that was, a couple of weeks ago, the $5 for a pack of crisps at the supermarket.
Whatever it was, yeah.
That was quite, wow, $5, man. That shit used to cost 80 cents not so long ago. So, and that's how it slowly creeps into everything. Now I read petrol prices go up in the US, and
everything's going up right now.
Car rental prices, all of that.
Everything. Used car prices, everything is going up. And it's a function. Again, this is a function of that.
Yeah.
I mean, again, we're at the end point, man. It's like, how much more lower than zero can you go? That's the question.
Yeah.
Not much lower. Used auto, let me see. Let's see. So let's look up total vehicle sales. Interesting. Sorry, give me a second. So total vehicle sales topping out, basically, right? Prices hitting all-time highs for used vehicles.
Yeah.
That's crazy. That don't make no sense. Let's see. Retail sales. Let's look at the used car dealers. Because I've heard that they've been slacking. Whoa. Look at that. That's crazy. Now, question is, what's the methodology? Let's find out. Because that's how you know what's really being counted and what's not. Boom. Hope you guys are seeing that, because this is exactly what I'm talking about. What they report is not the unit. It's the dollar value. And that's why everything is going through the roof. It ain't because you're getting richer. Sorry.
Yeah. That's interesting.
Isn't it?
Yes.
It makes you rethink a whole lot of things in your life, doesn't it? It should. So, What are we looking at here? We're looking at the simple fact that in the last, who knows? Let's see here. So since the Rona dip, right? We've gone from 6,000 or 6 billion, sorry, 6 billion in sales to 17 billion in sales in March. Used cars because of the inflated price. But what's astonishing is not really that. It's this. All-time highs when economic activity is at all-time lows worldwide. So does that not sound like stagflation?
Well, there's a disconnect between what the numbers show and what's
Reality.
really going on, because I don't see anybody buying cars. I live near a big airport, second largest airport in Germany, and I don't see any planes going like for a year now. So to me, it's impossible that I know all the, because in Germany, it's big on cars. That's our main thing here with Volkswagen, Mercedes, and they're all struggling because of sales, and now they're trying to make that flip to electrical and all that, but they're not selling anything. So the disconnect between what's shown in and let's say the Dow Jones representation or the number that you just showed, it can't be. There must be a major disconnect between the reality and those numbers, and that is weird.
Very. And these are the things, man, that I've been seeing for decades. Imagine, man.
Yeah, now it just amplifies that.
Yeah. And, having the mathematical proof in your face is like, whoa. And again, GDP measures the value. And we already know what that means. Thanks for the super chat, the super sticker. Bulls Lord, appreciate that. That was a mic drop for sure. Right? Because this is what it's all about, right? It's about understanding what's going on in the world, right? That's how you make all the correct financial decisions, right? It's not about what I'm telling you. It's about what you understand. Yeah. Because what I'm telling you isn't relevant, because it's right here in your face. You can see it. You know what I'm saying? Like, this is clearly what's true. I just showed it to you. Like, it's not my opinion.
Yeah. And you're saying this has been going on all along for the last 10, 20 years? And
for
it's
longer.
Just now that more people see it because they see that the world has come to a stop and to a certain extent, right?
I mean, if they're not seeing it now, I don't know what to tell you.
Yeah.
But you see everything that's going on. How the hell are stocks at all-time highs?
Yes.
Now, stocks are supposed to be a forward-looking barometer, sure. But, I mean, let's just take a look. Hell, let's just type it in. Let's type in the ETF representation. Really? Lowest economic output in history in terms of units and activity. Bar none. Highest count for social transfers. Bar none. During this economic time frame. Hands down, worldwide. And this is what's going on in the stock markets. Somebody wants to tell me this shit makes sense. I'll wait. I'll wait for somebody to make sense of it and say this is actual economic, truth and not fallacy. Right? Because this is why I spent this block of time. Let's see. When did I blow up? First time. Basically here is about when I blew up. So I basically spent this entire period of time figuring out how the hell was this shit going up when it made no sense. None. This is why I know what I know, because I literally did not stop until I figured out how the hell I could be wrong about something that I knew I was right about. And it's because the market doesn't care. The market's going to price in the math, the flows. That's what the market's going to price in.
Right.
That's it. Nothing else matters. Not
But
your
in your
opinion.
job, did you trade that market?
No. This is just myself personally trading.
Yeah. Okay.
Just myself. This is basic in your face shit. My people in my job haven't figured this out, bro. I'm sorry, they haven't. You know, they're just doing what they're told. That's how people survive, no matter the industry.
Yeah.
This is the thing people have to understand. People on Wall Street, they're not all savvy individuals. They're like everything else. You got your people that know and people that don't. And you got your rank and file, and you got your people that are just on the outer edges of the rope thinking that they're running shit, but they're not. So important to understand. But you know, this is economic reality, right? This is why so many hedge funds and so many financial institutions that stay on the buy side of the market have been just leaving because they don't know what to do. Because you had a whole heap of people, right, that over a long period of time, right, they were used to trading the market a certain way, and it made sense.
Yeah.
And now all of a sudden it just changed forever. So, you know, these are the things this is why crypto is so powerful. It eliminates the interference, right? If something's bad, well, price is going to show it, right? If it's good, price is going to show it,
Yeah.
right? Simple as that. There's no debating it. It's just math and code, and that's it. Doesn't matter what your opinion is. This is why I never give my opinion when it comes to Hex. It doesn't matter. But I'm always going to bet on Hex because I know what it's designed to do. And it's
math don't lie.
And
you can bring up UFO's comment, maybe.
Let's see. Everything cannot go forever true. After that big bang, our universe has been doing well so far. We're riding that wave all right, and we should just get better at surfing and staying on board. Very true.
Yeah.
Right? Because
I like that.
Yeah, it's true. Nothing goes up in a straight line, right? Nothing is linear. Everything is a ratio. And that's the biggest secret that most people don't know about the world. Everything is a ratio. Even this. Now, how do I know that this is a ratio to? Well, guess what? This is how I know. But where the hell we get Hex BTC or Hex to ETH price from? Or Hex to BTC if there's only one price for Hex? There's multiple prices for Hex. It's Hex versus whatever you want to price it against.
Mm-hmm.
That's it. Right? And for those interested, this is still in bull mode. You got to find the right time frame. That's all. Because this cannot go down forever. But it does have to retrace, right? And it already has. It's just a matter of when does it stop. Now, again, this is hit BTC, so I don't know what's up with their volume. But you look at Hex to ETH, it looks a little bit more decent.
Yeah, hit BTC is not representative.
Yeah, I wouldn't trust that. Yeah.
Oh, and it's the worst place. Jeez.
Yeah, I don't know much about it, but I'd steer clear.
I do. I tell you.
There you go. There you go. There you go. So we got somebody that knows. So this is the total crypto market cap, right? And this is against the dollar, right? Nothing goes up in a straight line. But when you look at this in terms of crypto, like let's say instead of looking at it in terms of dollars, you looked at it in terms of crypto owned or crypto not owned, right? I'm sure the waves would be similar to some extent. They would have to be. If not, then you would have to presume that there's pure manipulation in this market, right? Right, just saying. But again, right, like you see what's happening with the money, right? And that's what I want. That was really the first thing I wanted to point out. And it's so important that I had to spend an hour and a half on it because it's that important. right? For people to understand that when things are priced in a certain currency, that's what the value is based on for whatever that thing is. You're not actually richer. Is that the value of that currency that you're using has actually been fucked. That's what's happened, right? So now let's get to the topics at hand, right? You know, they were saying that they were going to stop, right? Pummeling. They were going to basically stop printing money, right? And their reverse repos are a function of that, right? That's what that's supposed to be. Because again, a repo is a loan, right? And a reverse repo is the opposite. It's the Fed taking their money back. And they've been doing it to the cumulative tune of 987 billion, right? So eventually all these monies are going to come due. The question is from where? Is it going to be from BTC? Is it going to be from the S&P? Where's it going to be from? We don't know, right? And this is why we're having this conversation, right? Because again, let's see. This is what it's all about. Let's see. Right? Because this is what's propping the market up, right? Now, how do we know? Well, if you look at the rate of change, now this is for the Federal Reserve. Now, how do we know that? Oh, no, wrong one. Assholes. This is FDIC deposits. Sorry, guys. What am I looking for again? Balance sheet. Reserve. I think this is it. Assets. Oh, no, I think this is the one I'm actually looking for. And again, they change this stuff all the time, so this is why I have to waste time looking. All right. Well, this is interesting. This isn't the one I'm looking for, but it's one to talk about. So what is this? Monetary base, reserve balances. Let's give you the proper definition. Total balances are maintained that an institution holds in a reserve account currently directly at a Federal Reserve Bank. Yo, was good, Corey. Shout out to you, my brother. You know this is an impromptu stream, homie, so all good. If you want to join, let me know, and I'll send you a stream link if you are able to join. No pressure, bro. So again, this is the money that
the Fed has loaned to banks, right?
No. This is different. This is a different monetary value. This is money that institutions are putting in the bank at the Federal Reserve banks, at their local Federal Reserve Bank.
Right.
So if you're a bank in New York and you don't want to keep this cash in your books, you put it with the Federal Reserve, get your 15, 12 basis points, whatever the Federal Reserve rate is, right? Because that's what that federal funds rate, that's what that rate that they get on these funds are. That's what gets paid out on this. So what the whole point of showing this chart is this. When the banks were given all these funds back in 2009, 2008, it was with the anticipation that they would, conduct economic activity, like make loans and shit. But that's not what happened. What happened is that the funds came here. If they weren't going into financial engineering, they were coming here. That's what happened into the reserve, into the, this is basically a reserve bank account for, what do they call the word? I can't remember the damn word because I hate it so much. Something reserve. Whatever. Reserve funds basically is what it is. Like just cash they have sitting on the side that they don't know what to do with. So they put it here, get their 15 bips. You know what I mean? And that's it. Hold on, let me send Corey this link. But yeah, that's pretty much it. Right, give me a second. Boom. All right, that's on the way, homie. But yeah, so this is why I'm showing this chart. So again, it's all about how they're hiding the flows, right? Because this is how I'm able to sniff out what's going left, what's going right, what's going up, what's going down. And that's why it's important to talk about this, right? Because they said they were going to stop. And actually, now that I look at this, what is odd to me is that this looks like the credit balance. Hold on. Bank credit all commercial banks. Oh, this is too funny. All right. So this is why I'm gonna be famous, right? Like, all right, let's look at the time frame. Time frame is 2002 through 2008. Nothing happens. Then all of a sudden, 2008, shit pops off. So let's slide this here to 2000. Come on. How about that? Credit increasing over time, nonetheless, unlike Federal Reserve's balance sheet, right? Doesn't grow at all until 2008. What happens to bank reserve assets? They go sideways, 2007. All the way, okay, through September 3rd. That's probably their first QE program. I don't remember exactly the date. But then they started another one because they see it didn't work in March 2010. Right? And then from there, it's off to the races. Right? 2010, off to the races. Now, we were just looking at the SPY. 2010, off to the races. 2011, 2010, off to the races. Let's look at this in a little longer time frame. Coincidentally, a technical point, but off to the races, 2011, 2012. So you see capital flowed into here, not by mistake. You got to make it look good, right? January 2012 takes off. Because if we look at the rate of change, the biggest rate of change is going to be here. Outside of this one, right? Because this is constant. So let's see what that looks like. All right. Now, what was the time frame? So yeah, it was the opposite of what I thought as far as rate of change, but it was the biggest peak to trough rate of change, which is the whole point. The absolute rate of change is the biggest here. So if you look at it from -5.5, right, to 10, that's 15% peak to trough. We've never had that big of a range, ever. It's always been up here, right? What's the tallest? 14.
But what's the connection to the repo?
Well, this is credit, right?
So that's where you started out.
This is all bank credit. Yeah, this is all bank credit, right? So if they're pulling bank credit, this affects the whole economy.
Yeah.
Right. And now the interesting thing is if you look at this chart normally, it looks like the Federal Reserve balance sheet, right?
Yeah.
Right. That was the whole point of why I started showing that. Coincidentally, right? Because
it's all connected.
It's all connected, and this is just piece one to the puzzle,
yeah,
right?
Sure.
This is all just piece one to the puzzle because this is what's happening in real time, right? And yesterday there was a policy decision, right? And that's what we're going to go into to talk about that. Now, this is the real yield. Now, what's the real yield? The real yield is essentially the real rate of return that you're getting on your paper. So if you're locking away currency for 10 years, that rate of return is going to be minus 4%.
Yeah.
That's basically what this is saying, right? And just to put it in simple terms. But the value of your cash is just deteriorating at that rate because the real yield is the nominal, like the interest rate minus, or the inflation minus the nominal interest rate. So if the inflation is high and the nominal interest rate is low, you're going to get a negative number. And this is just one of the many ways to look at it. Right? This is just somebody else's chart. Just to give it a view. So the blue line is the spot real yields. And you know, this is back in the day. This is to today. So we're hitting like dangerous levels that haven't been seen since 80s and the 70s, man. So inflation is about to get ugly, basically, because this is a loss of purchasing power that's real.
Yeah.
Because this is, again, inflation minus the nominal rate. And the nominal rate is just what they say the rate is. Sorry, hold on. So for a 10-year U.S. Treasury, 1.25%, right? So if inflation is 5%, you subtract 5 minus 1.25, you're gonna get minus 3.5 or whatever. Like that's the real yield is a negative value, because, or it's hold on. Pretty sure it's what do you call it? The nominal interest rate minus the what do you call the inflation rate? And if the inflation rate is higher, then the real rate is going to be negative. Let me see, where is it? So everybody can read the definition. Yeah. So it's like I said, it's a nominal yield. Where to go? Where is it? Yeah, nominal return minus inflation. So if inflation is greater, right, than the nominal return, then your rate of return is going to be negative. Same thing when you're talking about yield, right? Yield return, same word, really. If the inflation is greater than what you're earning from your investments, then your return is negative. That's really all that this is saying. Mm-hmm. And this is a very important concept to understand, because a lot of people don't get that, because they think making 5% on their SPY ETF is cool, or 10, 20%, but it's not, because inflation is much higher than that. And that's real, right? And that's what we're seeing when we're looking at Bitcoin at 60,000 or 30,000. Like, that's what this is saying. It's not saying that Bitcoin is a shit. It's saying that the dollar is trash. That's what's actually happening, and people don't understand that. But this is why it's important to understand it, so that you're protecting yourself and you're in the proper assets, right? And as we know, best one is this one. So don't lie to yourself. Trying to hold some bootleg mess over there that's a promise coin. Just saying. Just saying. I'm making all these points because it's real. Facts. Excuse me real quick. Got a cough.
Sure.
But yeah. So this is why I'm going over all this stuff, right? Like, all these pieces of the puzzle, they matter.
The legal strawman had a question about shorting. I don't know if this is off topic, or
let's see
if you want to get into that.
Banks are getting built.
It was a bit higher up.
Yeah, I'm scrolling. Let's see.
Like they shorted market open, and I don't know.
Let's see. Fastbeat comment. Yep. There you go.
Yeah, I think it was one above that one.
I see. Yeah, it actually is one above that. But yeah, actually, this is an important comment, guys, because again, I talk about this all the time. You know, if you don't know the rules of the game, you're not playing it. You're getting played, right? And they write the rules and they change them at a whim, and they don't give a rat's ass. And it's important to know this. Yeah, they do. You know, it's important to know this. So let's see here. What about the short calls you'll see that are put in before the market open? Let's see. How do they all get together and make similar short calls in the stock?
That's what it looks like.
Yeah, so yeah, let me explain that. Give me a
Like
second.
Bitcoin, everybody dumps on the same day, the whole world.
Yeah, so
Funny how that works.
isn't it? So there are these things where they get together and they discuss ideas.
For real?
Yes. And you guys got to understand, right? Birds of a feather. Right? Birds of a feather. And this is how that happens. Right? So now the idea is that retail is all in. So let's see. Now, what is this Buffett indicator? The Buffett indicator, also known as the Q ratio, is just as you guys are seeing here, the total market value versus GDP. And well, I just told you guys how wrong GDP is. So let's think about second order effects for a second. If the GDP looks out of control and it doesn't look anything like this, look at this vertical line. This is the market value of assets versus GDP, which is priced in US dollars. So this is the second derivative of a price of a US dollar asset, right? That's basically what this is.
Yeah.
Because GDP is all the goods and services produced in the US. So this is a second derivative of that value to a certain extent, because this is a function of a market. And the market produces all those goods and services. Does that make sense?
Yeah.
So this is the highest it's ever been. In 2007, when the world almost ended, it wasn't even this high, right? And now we're 100% greater than we were at the most all-time high for the all-in tech crash of 2009. Now, I want you guys to know something, because this is how long I've been doing this, right? I don't even need to read the articles. I'm showing you articles that I picked off of headlines. I don't know what these articles say. I just know that whatever's in here is going to be what I need to talk about, because I already know the game. So once you know the game, you don't even need to know what's in the article. You already know what bullshit is going to be in there.
Yeah.
And this is what I want people to understand. This is not hard. If I can do it, trust me, anybody can. This is not hard, because they're giving it to you in real time all the time. You just got to figure out how to connect those dots, because, hold on.
It's a 5-0 again.
You would think. Let's see. I think they might give me a little break. Hold on. All right. I think we're safe. All right. Let's see here. So, come on.
I mean, 2008, that crash, in hindsight, I know back then it was dramatic, but in hindsight, it wasn't actually that crazy. What was scary during this one is that so many of the banks were all of a sudden in trouble, and that was not really seen before on that scale.
Yeah, that's why it was scary, bro, because the banks, like the financial system was coming. It was scary. It just wasn't scary to you.
Because if you had like an Amazon stock, that should bounce back 1.5
no problem,
years.
right?
You just
but the financials took until like 2012 to take off.
Yeah.
Took forever. So yeah, you're right.
What?
You're right. It's funny because you're right.
No,
it seemed like it wasn't scary, but it was, because everything tied to the banking system was on edge, and that's why it was scary.
But that is now what I maybe foresee happening with the repo, that again the credit lenders could get in trouble if everybody now all of a sudden wants their money back, and so something has to give there. Or is that wrong?
Nope. Correct.
What is this with the cars? Because that is, can I ask you this? Because this is, for me, just curious as a German looking into the American way of things. Like, there was a channel on YouTube I used to watch. I'm not watching it anymore, but it's called the Money GPS. I don't mean to shill his thing, but I don't know if you're familiar with with his channel, and this is it's like some economics student, I think, out of Seattle, and he has similar content, not crypto. It's all legacy market related, but he sort of kept saying next week Thursday Wall Street will crash, and he's been saying this every week,
years,
literally for years, and it never happens. But around that, he picks up same as you do certain topics, and he had one thing about the cars, and please tell me where I have this wrong, because my understanding was that, let's say you buy a shiny new truck, you go and buy that for, I don't know, what did an average truck cost 10 years ago? Was it 25 grand or something?
Yeah, 25, 30 grand, something like that.
Something like this. So you would buy that, and then you would drive that for 2 years, and then you get the next one, another new car.
Right.
But during those 2 years, obviously, you have not paid in full back that original loan. So that loan gets somehow transferred over, but also connected to the value of the next new car. And so people would do this like 5 cars again and again and again and again, but never paid off the first car, So, and then when repo comes to play, you could say, yeah, well, there's always the car against that, but we are now 8 years in or something, and an 8-year-old car, everybody knows that doesn't have that original value anymore.
Right.
So that's how this whole system can collapse, and apparently that is the biggest threat in that whole repo system, because so many Americans are apparently doing it this way, and I don't understand how this can actually go, because I think I could be wrong, but I think in Germany, like, you're not getting another car until your debt is sort of, like, you have the credit rate, and if it shows you have 3 unpaid loans, you're not getting a 4th one or something, there are these measures in place. Is that not the case in the States, or do I have a wrong connection there somewhere?
No, you're right. You're right. But
what? I'm right.
Yeah.
That's how it goes.
But it doesn't matter.
So that's how it goes.
Pretty much.
Wow.
Hold on. Listen, check this out. Saul Goodman is chiming in. Shout out to Saul Goodman. If you never watched the show Better Call Saul, you got to. It's hilarious. It's so funny. There is easing in place to prevent auto repossession at the moment.
Yeah, because of the crisis. Yeah.
Well, I guess they got to do it, right? Got to do it, right? No choice.
But that just blew my mind, that story, when I saw it. Like,
yeah, no. So what happens is when you're exchanging one car for the other, a car you originally have, it depends how they do the financing, right? But typically, depending on the car you have and the value and how good or bad it is, what they'll do is they'll give you a trade-in value, right? And they'll roll over that debt onto the new loan, or or you pay it off, right? Because you got to cover that gap, or they finance you. Like, there's really no other choice,
right?
So yeah, it's crazy out here, right? And look at this.
No, but that apparently is not a small market. That is like billions.
Yeah.
Billions
Yes.
worth of dollars.
Look.
And if that was to collapse, which is about
to, check it
now
out.
With everybody doesn't have the income, can't keep up with loan payments because of the crisis. So that is just one stone falls onto the next one.
Correct. Ripple effect. And look at what you're looking at right now is $1.25 trillion of securitized loans. Loans owned and securitized, meaning somebody owes this money to somebody somewhere.
Yeah.
$1.2 trillion. So, yeah, it's getting real out there.
1.2 trillion. Jeez. So if somebody in that chain says, okay, now could be China. I want my money back.
Yeah. Could be anybody.
Then what?
Exactly. So back in 2008, 2007. Hold on, man. Jeez. All right.
you live in a great neighborhood. There's all this
It's just a high
well
traffic area.
protected by the police.
It's high traffic area, man. It's crazy out here. So back in 2007, 2008, I remember, and this is what drew me to finance, is what I was seeing in the mainstream media, interestingly enough. And what you would see were these reports of these seizures in these markets that don't even exist anymore. They don't even exist. So I'm not even going to detail them because there's no point. I don't have anything, like, I'm not going to show you some stuff that doesn't even exist anymore, right? But and it's just the same questions that you have, Crypto-Matic. It's just the same questions, and that's what brung those markets down. Like, what happens with this gap of value here? Like, who's filling that gap? Because they overextended themselves in terms of leverage, right? And that's what gets every market, every time. It never fails, and that's exactly what we're seeing here. I mean, and this is what we're pointing out. We're pointing out all of the ways that the market is leveraged. Literally, that's literally all we're doing. Let me see. Inventories is what I want. Let's see. This is wild. This has to be freaking cut short. All-time low in auto inventories. Really? Come on, man. Have there been that many floods? Like, you gotta do better than that. Inventories to sale ratio. Let's see. Should be a better measure. Because this is using the dollar value. Yeah, that's what's going on there.
Well, they had troubles with production too because of the Suez Canal was one thing, and
they're trying
chip shortage apparently for.
I remember that. Yeah, they're really trying to. They're really trying to.
But on that scale, I don't know.
I'm sorry. Go ahead. I'm sorry.
No.
I was gonna say, yeah, they're trying to find ways to create inflation. On top of that, you see a lot of fabricated shortages. Like, there was a chicken shortage for a little while, didn't last too long. Like, they're just trying whatever they can, man. They don't care, they're just trying to figure it out. They got no shame. Yeah, all right. So we're not gonna get any good ratios for this. I thought we were going to be able to, but nah, because they're just using the market value. And again, the difference between looking at the market value and looking at the unit count is that the unit count will actually reflect real economic activity, right? It's not gonna do anything else. So all right, I know Maddie's streaming probably now, so let me wrap this shit up. Hold on, give me a second, guys. I'm pretty sure he is streaming. I just want to confirm. Okay, yeah, he's probably waiting for me to finish. Let me wrap this up. No charts today, but I'm gonna wrap this up. But I just want to highlight, right, like how extreme things are right now, right? Where things stand. Like, this is all-time high. Like, I'm sure Warren Buffett doesn't know what the fuck to do because this is his metric, right? Like, I'm sure he doesn't have a fucking clue because he's never seen this before. Uncharted territory, right? Here we go. I was gonna talk on this anyway. See, but we already covered it, so we're good. We can move on.
Yeah.
Oh, hold on. So, guys, this is what I'm talking about, right? They have no idea. So this is why they ask you.
Yeah, this came out last year.
They have no idea. So this is why they ask you. And notice there's nothing after for them to ask for because they can't ask you for shit else.
But if you click yes, you fall into a roster.
Good luck to you. Hey, man. All I can do is show you the fucking ropes. I can't tell you what to do. It's right there for you to read, right? Like, at any time, did you receive something? Like, why would you think they would ask that? Seriously, think about it. Why would they ask that? They send you a W-2 to fill out everything else. Why would they ask you this? They don't send you a form for this. So why would they ask that? Right? They, like, in the US, the IRS the tax folks, they send you a document letting you know what you have to fill out. But here, there's nothing that they send you to fill that out. Interesting, no?
Yeah, they put this in very last minute also, I think.
So again, shrinkflation, right? This is what we're talking about. We're seeing smaller size packages, right? All over. This is happening all over the world too. This isn't even just U.S. centric. This is happening worldwide. And what's happening is that these producers are putting in less quantity, right? You're paying more or the same for less, which is paying more for less. And this is just them, again, passing on the cost of the consumer however they can.
Yeah.
And these, things that you have to understand are happening real time, right? And here we go. U.S.
Chat's
pending.
going crazy over this. They're like, we've not heard of crypto, never.
Wait, what? Oh, yeah, exactly. Better not. Yeah. Pending home sales tumbled in June due to a huge spike in prices. No shit. Well, you thought we were just going to give their money away. Right? So in June, only existing homes saw sales rise. And that was de minimis from a notable earlier rise in May. Right? And this is from the powers that be themselves. Right? Like, this is coming from them. The moderate slowdown in sales is largely due to a huge spike in home prices. Now, we know why the spike happened, right? We've already been over this ad nauseum. When you print trillions of dollars, you can't expect the dollars to go nowhere. So, interestingly enough, while the U.S. is trying to reinvoke, right, their quantitative easing strategy here to keep rates as low as possible, as we've heard from the Fed today, China is back to being the taperer in the market, meaning it's pulling liquidity at a greater rate than the Fed. And today, the Fed basically pulled back on its promise to continue to. I mean, I don't know what the hell the Fed is doing, man, because they're doing everything right now, and that's what's interesting. They're pulling liquidity and they're also providing it. So, not quite sure what's going on. We're going to talk about when to taper, but it's lower for longer in the meantime, meaning their rates are going to stay lower for a long time, while China right now is saying, yeah, we're just going to drain all the liquidity. And look, initial jobless claims disappoint as number of Americans on the dole rises back above 13 million. Now, again, what is the definition of stagflation? Recession inflation in a situation in which the inflation rate is high. Check. Economic growth rate slows. We already know that's a lie. So check. And the unemployment rate remains steadily high. Check. Check, 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 motherfucker. You know what I'm saying? Like, damn. Like, what the fuck, man? Like, how, like this is what's actually going on, and nobody is calling it, right? We've been in stagflation for at least a decade, at least, if not two. And that's the reality, right? And nobody wants to see that, or at least call it. Now, here's something that people need to understand that's going on. World War III is upon us. No bullshit if these people get away with what they're trying to do. Now, what do I mean? The other day, this man literally let everybody know.
Yeah, he was threatening.
Yeah, as it stated right here, that a significant cyber attack in the U.S., which of course we can't confirm nor deny, right? Because we're not the ones that are going to be tracking it. And I think I've showed people a site where they can actually keep track of that. Could lead to a real shooting war with a major power, highlighting what Washington sees as a growing threat proposed by Russia and China. Now, I don't know if you guys know, but they've recently tried to they're trying to recently reinstitute the female draft in the U.S. War draft. Yes, females. Exactly. So they're trying to amp up the volume before they get live. So today, yesterday was the FOMC's, I think, quarterly meeting or every other month. I don't remember when they do it anymore because I don't keep track of it. I honestly try to just ignore it because it's a waste of time. But here are these small takeaways from whatever they're talking about, right? They're trying to act like it doesn't exist. But, even though they're calling it transitory, they mentioned it 10 times, right? If something was really temporary, they wouldn't measure it. They wouldn't mention it 10 times, right? So much for that. Not really transitory if you're mentioning it 10 times, right? Tapering. So tapering is when they're trying to increase interest rates, i.e. normalize things, or right, stop providing so much support to the market, try to let the market do its own thing. Not what's happening. Last September, the committee indicated that it will continue to increase its holding until substantial further progress has been made. Now, they've been saying this since 2010, 2009. It's 2021. I don't know how much more progress we need, but apparently an infinite amount. Starting repurchase facility. So again, this is what we've been talking about for months at this point. Interest on excess reserves. This is the term I was talking about. I couldn't remember it, but here we go. Now that I've seen the abbreviation, that's what I was talking about over here. Let me see if the chart pulls up. Let's see. Nope, that's not it. There we go. This is interest on excess reserves. This is what this actually is. That's the technical term. So there you go. Powell defines substantial further progress as maximum employment, which we know we're never going to reach. So, yeah, with little or no regard to inflation. So this is important. And the reason this is important is because people have to understand what the implication of all these things are, right? And if you're caught being exposed to the wrong thing financially, you're going to pay the price, right? And what happened today after this guy spoke? Well, the stock market took off, right? Mm-hmm. And that's typical. Like every time this guy speaks and he sounds like he's having a baby, the market's going to take off because they take it as, they take it as a sign of weakness, right? And then that's what they like, right? We're looking at a 15-minute chart here. And this is today's price action, right? It literally topped out while he was talking. So much for that. So yeah, this is just not good, man. Not good at all. Wait, hold on. Was I looking at the right date? 28th. Here we go. This is it. During the press conference. My bad. So here we go. And it's already not looking too good. So if it breaks this level, right after all of that dove talk, right, because it made new highs, right, like that's what just happened. It made new highs and everything. And it made new highs on the strength of that comment, right? So
yeah.
If that pulls back and it recaptures 440, that's going to affect the whole market. And as we can see right now, Bitcoin is already rolling over. This is the only reason I'm mentioning it. It's because it's topical, right? So we have that. Check, right? Gone over that. Excuse Phil. I mean, like, this headline, I just really wanted to go over it, right? This headline just really tells you everything that the legacy market is now coming to realize that's been obvious for at least 8 years. Or at least 7 years to me anyway. Record highs in stocks and home prices, record plunges in affordability of stocks and homes, record crash in home buyer confidence, near record spikes in inflation. Retail sales and durable goods orders surging. More than half of the country is vaccinated. There are near record number of job openings. But still, rates are at zero, monetizing $100 billion a month in treasuries and MBS. Just because this is clearly not relevant, right? And this is what people have to understand. In my opinion, now this is my opinion, right? If you connect all these dots, what they're doing is that they're bankrupting everybody by keeping rates low. Because what happens when they do that is that they punish the savers. Because you can't save when you're not getting paid any interest on your currency.
Right? There's negative interest over here.
Correct, exactly. And over here, it's
if you hold
zero.
more than 50,000 euro in your account, you're being charged now.
There you go. And it used to be 100.
Yeah.
It used to be. So, this is all important stuff, right? Like, they're just doing whatever the hell they want to do. So standing repo facility. This basically means, this is the comment that was made earlier talking about that they nationalized the the repo market, right? So this is what they mean, right? So today, the FOMC directed the open market trading desk at the Federal Reserve in New York to conduct overnight repo operations with a minimum bid rate of 0.25% with an aggregate operation limit of 500 billion a day. A day. A day. Effective today, actually. Now, what does this mean? This means that if you want to leverage up, step up. We got 500 billion for you. But they're taking money out of the market too. So it's like, well, what the fuck is going on? Right? And nobody knows. And all we can do is provide our best guess. And my best guess is that they're literally trying to blow it up. Nothing else makes sense. Why would you try to pull the rope at both ends of the, like, why would you try to do that? Right? Doesn't make sense. So they have a constant repo facility for just regular market, right? Because that's what this is. This is just regular standard repo facility, 500 billion, effective 21st of July, right? Primary dealers will continue to be counterparties for repo operations under this thing. And that means that the banks are going to be the other side of the trade when somebody's stepping up to lever up. Let's see. Oh, false. So what's going on here is that in this text, counterparty means people that are allowed to borrow. So primary dealers will continue to be counterparties for repo operations under the standing repo facility. The standing repo facility counterparties will be expanded to include additional depository institutions. Initially, criteria will be established to effectively manage onboarding of interested depository institutions. So if you want to open up a bank, get to it before the window closes.
Well, Richard is about to open a
you better get to it. There's some free money on the table.
Yeah.
Between now and whenever they shut that window down. So
let's get it.
Get it. But that's what's going on, right? Like that's kind of what I wanted to bring people's attention to, like what's going on in the markets. Because they're not out here playing games, right? They're out here doing what they want to do, and as you guys can see, they're lying to you 20 ways a Sunday to do it. And they're not afraid to, right? Yeah. Like that's this tweet, I completely decimated this tweet. This is complete bullshit. Like, no, it's at all-time lows actually, but nice try. You know, and they're just gonna lie
all
to you.
About marketing.
Yeah, they're gonna lie to you. What else they got to do? They don't got anything else to do.
Yeah,
you know what I mean. And yeah, this is a great point. But a lot too for Central. Yeah, I don't know anything about those Akira token, brother. Sorry. Yeah, we'll talk about post chain for a little bit, and then I gotta wrap it up because Maddie's probably waiting on me if he hasn't started already.
Rep 2 is like 3 a.m. here, man.
Oh man, sorry, brother.
No. It's been great to be on here.
So let me just wrap this up. I just want to again show you guys the power of a 5555 stake. Right, this is just 15,000 hex. This is at a prediction of $5 in the future, right? We're talking about $500,000 in interest, 75,000 in principal, right? More realistic is a $50 price, right? And just multiply by 10, right? So that's the power of holding long term, right? 4.5, baby, getting that interest rate. So here we got 4 hours left until this day is over. We got 3 days left for the total stack phase, or 4 days left for the total stack phase, and we got 1 day plus for the volume bonus ranking to be in effect.
That's at day 17, right?
Yeah. Yep. After this is day 17.
Yeah.
The 17, 18, 19 here. And that's what's going on there. The rate is up here. Let's see. Pulse lead.
Tuesday midnight.
No, it's gonna be Saturday. Saturday night here, maybe Saturday morning for you. Cause the day 17, like the days roll over at like 4 in the morning UTC, if I remember correctly, like 4 or 5 in the morning UTC. So that's like 1 in the morning here, 1, 2 in the morning
Right.
Eastern Standard Time. So around there. Hold on, let's check. Okay. Wow, 675 billion, almost 676 billion in ERC20 sacks so far. You know, this is just wild. This is just wild. Phenomenal numbers, and as you guys know, this is a political statement, right? And the political statement is that we stand for free speech and we want a non-censored blockchain, right? And that's what the sacrifice is a representation of. So let's make sure we keep that in mind when we're talking about the sacrifice and we're talking about what's going on with respect to Pulse Chain, because Pulse Chain is going to be a censorship-free. Yeah, I'm not pumping it. Actually, they're dumping it right now. 12.6 cents. I mean, this is a good buying opportunity in my opinion. You don't get many edges like this to trade in Hex. So
yeah, sideways still. Overall picture.
Yeah, I mean, we'll see.
It doesn't print new lows, so
yeah, I know, which is interesting. But it didn't get above the RSI, which is not typical. So we could be going lower for a while here, actually. Interesting. We'll see. But yeah, like the interesting thing is that could be a fake out, right? Because we got legacy market functionality now on the book order, and that's something that's going to take people a little while to get accustomed to. But it's real, so hard to say what's actually causing the downdraft. But what we can say is that Hex is looking solid overall, because I mean we were just at 8 cents the other day and we're still up 50% from that price level. So
yeah, and it's holding pretty much above 10 cents, so that's amazing.
Pretty much. 3.121 billion Hex sacrifice, 136 million USDC, 27.6 million stablecoin, and 22.5 million tether. So we're moving along, guys. I'll do a chart set video for you guys tomorrow. But this is pretty much the end of it for me and Cryptomatic. Cryptomatic, go ahead, show yourself, brother. We're gonna wrap this up.
Album and stores right now. Going on tour? No, not really. So I would appreciate if people join me on Twitch. That'd be amazing. Twitch.tv/DJ_Cryptomatic. I'm doing my DJ streams with a bit of a Hex chatter and Hex content on the side, but it's mostly a music show just to provide a little bit of entertaining, something different from all the other streamers. And
for sure,
also follow me on Twitter. It's at DJ_Cryptomatic. And then you get the notifications when I go live, if you are into that.
Right. How often do you stream? You seem to have some kind of schedule.
Yeah, I have a schedule. It's like it's always the Sunday, Tuesday, Thursday. So I stick to that religiously every week. Not next week. I'm taking a break for that one coming week. But it's been like that since January, and middle of August I'll be back at it again. And it's Sundays is always house and club music. On a Tuesday we try to make it a bit urban, soulful. Some disco joints from the 80s, so it's more it's more that soulful funk music on Thursday nights, which was tonight. We've done the country music thing, which is not that popular. It's a very special audience, but there we try to change it up every week with a different kind of thing. So it could be 80s music, 80s pop one week, could be drum and bass, can be country. I'm trying to flick through the genres to attract different people on Twitch from the main Twitch audience. That's really what I'm after, to get no corners on the stream and get them interested in Hex through the music. And then we would shill to them what Hex is during my show. And it's always fun. And there's always a lot of Hexkins around that make it all entertaining. It's different from all the other streamers that you see in Hex, but if you're into music, then please come through and check it out.
For sure.
That's me. Thanks for having me on. It's been
man, my
great.
pleasure. My pleasure.
I'm
man.
always learning from you, man. It's I hope you keep up your streams as well. You also have different topics each time, and of course you have the standard charts that you run through, but that is also interesting because it updates every week. But it's also that additional value that you provide, you know, about the legacy markets. I think is just so important for all of us to know more about.
For sure, yeah, it is, because that's what helps us understand that we're making the right financial decision when we make the decision to stick to crypto, because it's a decision that has to be made, right? We can't really just assume that it makes sense. You have to think about it and make sure that it makes sense. And this is why we go through all these steps, and these streams are so long sometimes. Like, it's important information. But yo, thanks for coming on, man. And you guys, as you guys know, can find me on Twitter at just what you're seeing on the screen now. Telegram, t.me/Wills Only, and youtube.com/Wills Only. And I will have a website coming out soon, willsonly.com. Right now,
when website?
I don't know, man. I'm working on it, bro. But I keep doing these streams. That shit keeps getting delayed. But it's gonna come out eventually. Don't worry. I'm pushing it out there. I'm almost done with the first draft, so it'll come out soon. It'll come out soon. A little something for the people.
Awesome.
Yeah. So, guys, we're gonna cut it short. We gotta let Cryptomatic go because it can go on forever. Check out Maddie's stream. I'll put the link in the chat. And thank you guys for joining us as always. It's always bunch of fun. Much love to everybody out there, and thanks again, guys.
Take care. Bye.